வச்சுட்டு போங்க எங்கனா. Saurav sir, shall we wait for some more time?
Yeah, we can start in a couple of minutes. You can tell me. Hello. Apurva, you can hear me?
Yeah, I can hear you, sir. Yes.
Yeah. So I'm saying we can start in a couple of minutes.
Sure. Yes.
Yeah.
Yeah. Thank you.
Excluding the speaker, we have about 18 participants as of now. I think we should go ahead.
Sure. Okay. I'll start it. Yeah. Am I visible? Is my video and my audio clear?
Yes, sir. Yes, very clear. So, shall we start?
Yeah, absolutely.
Okay. Good evening, everyone. This is Mr. Saurav Ghosh from JIRAAF. He's a co-founder of JIRAAF and has a decade experience in corporate finance in the infrastructure and real estate sector. Over the last decade, he has managed transactions of more than $1.5 billion across the capital stock, including structured credit, vanilla debt, and equity. He's an alumni of IIM Ahmedabad, Bitslani, Goa campus. Over to you, sir.
Thank you. Yeah. First of all, I would like to thank the IFA Galaxy team for
your audio, your visual is stuck.
Yeah.
Yeah, now fine. Yeah.
Okay. Yeah. So first of all, I would like to thank the IFA Galaxy team for giving us this opportunity, and would like to welcome you all to this session. And I hope that this session is informative to all of you, and we hope to have a very engaging discussion. Right. So I'll begin. I'll just share my screen as well. I will use a presentation to take you through what we call as the space of alternative investments and what JIRAAF is building in the space, and how all of us can collaborate to make this space, take this space into the next decade. So I feel that these are all emerging asset classes, and the next decade or two will be where we see a lot of new emerging asset classes emerge, and fixed income will have a big role to play. So I'll just share my screen and take you through some of our thoughts. Is my screen visible?
Yes, sir.
Yeah, great. Yeah. So if you just see the what we have written below JIRAAF. So JIRAAF is a platform for high yield alternate investment opportunities. Right. So this is a completely new asset class, which we have not seen in the market yet. Right. And it's just, I would say, come up in the last couple of years. So I'll start off with defining what we mean by alternative investments and what the landscape looks like in India today. Right. So as Indians over the last, I would say, many decades, we have been investing in traditionally 3 or 4 asset classes, and those asset classes are equities, then fixed deposits, or maybe some people invest in debt mutual funds, and then your physical or tangible asset classes of real estate and gold. Right. So most of us, and I would say maybe 99% of wealth is invested in these. Obviously, HNIs and ultra HNIs have access to, I would say, more structured products, but that does not, that does not form a large part of an financial portfolio at the India level, right? While HNIs might have exposure to it. I also want to touch upon, the history and the evolution of each of these asset classes in the country. So if you look at, the early 1990s, that is when equity markets opened up in India. and it took a decade, till 2000 for the equity markets to become mainstream. The mutual fund industry opened up in India in the early 2000s. So 2001, 2002 is when the mutual fund industry opened up. And we have seen that over the last decade that, mutual fund has become kind of mainstream, where people earning even 50,000 rupees a monthly salary are doing SIPs of 5,000 rupees. So it's taken a decade or 2 decades for the mutual fund industry to become mainstream. And it was an exotic asset class in the early 2000s. And I feel that, over the next decade or two, several such asset classes will emerge. And we largely and strongly believe in the fixed income space. Right. And if you see the current alternate investment space in India, so what do we call alternative investments? Any product or asset class which is non-traditional. And I mentioned the traditional ones, which is equity, debt, high yield papers or fixed deposit, real estate, gold. All asset classes outside of these traditional asset classes is what we call as alternative investments. And these are the new emerging asset classes which have come about in the last 2 or 3 years. Now, if you look at the graph on the bottom left, right, we have tried to basically map asset classes from a risk and a return spectrum. And on the y-axis there is yield or return, and on the x-axis you can see risk. So there has been a lot of activity in alternate asset class in the top right end of it, which is the high yield, high risk space, which is your cryptocurrencies and angel investing in startup. These are few of the things which have come up in the recent times. But this is not something we felt was the right product for mainstream large retail investors. Yes, they will have their own I would say position in everyone's financial portfolio for their for their own nuances, but it's not an asset class which mass retail or Indian consumers can take large exposure to. Right. And if you look at then what is there in the market today, there is public equities markets over here, and at the bottom left of it you see fixed deposits, real estate, and gold. So as Giraffe, we felt that there was a big gap between the equity markets and your fixed deposits and real estate, gold, which is unaddressed, and that space can be addressed by what we call as high yield and fixed income products. Now, if you look at the top right chart, today the alternate investment space is actually just 1% of the overall financial investments made by Indians, and that 1% is, as we know, is only filled by HNIs and ultra HNIs. So equities and mutual funds also is seeing a 35% CAGR, year on year at the moment, and that also has a lot of penetration yet left in India. So you can imagine how large the alternate investment space can get and how quickly it can grow over the next decade or two. If you look at global studies, uh, alternatives have been a part of 10 to 20% of an individual's portfolio, and that is what it has been recommended. But obviously, this is for a far more mature market like the US. In India, we feel that number may be 5 to 10% to begin with, and then it will evolve continuously with India's own financial markets and own financial journey. Right. The question that we wanted to answer today was, why should you consider this high yield fixed income space that I spoke about, right? So here I'm just depicted how a typical individual thinks about their portfolio. We split our portfolio in two buckets. So one bucket is what we called a risk free corpus, and the other bucket is growth capital. Risk-free corpus is what we call as our emergency funds or immediate liquidity requirement. This is not the money on which we are hoping to get any return, and hence this corpus is typically kept in fixed deposits, or it will be just lying as cash in your bank. The other is what we allocate as growth capital, and today largely these will be invested in equity markets. Now people who are risk averse put a lot of their money in the risk-free corpus, and people who have that risk appetite are probably 89%, in the equity markets from the overall portfolio perspective. But this is not a balanced portfolio. And the reason that this is not balanced is because while your risk-free corpus is safe and not earning returns, your growth capital is subject to one shock, which is your external environment. And in equity markets, for example, if there are external shocks like COVID, if there is a even a presidential election in the US, there's a Russia-Ukraine war, any of this, there's a demonetization in India, any event that happens, it will hamper the equity markets equally. And if you are a investor, you don't know that in the next 1 year, 2 years, or 3 years of time, whether you will be able to recover money from the equity markets, in that time period, right? So we feel that while for the more long-term view, if I'm investing for 3 years, 5 years, 7 years, if I have a very long-term horizon, equity is a very stable asset class. I personally invest all my long-term capital in equities, and because all of these short-term shocks, it can gets basically absorbed or avoided if I have a long-term view in that space. But if I'm looking at creating a balanced portfolio, I'm looking at immediate liquidity, I'm looking at long-term growth, I also have short to medium term plans. And for my short to medium term plans, I am either left with earning very low yields, or I take that risk with equity markets, which give the may not give the returns that we anticipate. So we felt that you can use fixed income products to diversify your portfolio and create a more balanced portfolio. Now, all these products that we'll speak of, and I will address that in detail in the coming slides, what these products actually are. But all these products that we speak of, they are not replacement of any asset class out there. So someone who's investing in equities, in fixed deposits, or gold, whichever asset class you're comfortable with, please continue to do so. But what all of these products will help you is, it will help you diversify. It will help you will get more options at your disposal, and you will be able to create a more balanced portfolio. So all of these new products that we see in the market, we should take time to get comfortable with them, understand them. And these are just more and more options today available at our disposal. Today we had access to 3 or 4 products. Now with these emerging products coming up, we have exposure to 7 or 8 products, and we can just create a more balanced portfolio out of it. So no, every asset class has its own pros and cons, and we have to create a portfolio that is suitable to our own risk appetite and our own needs. How do you consider the fixed income space? One is, it has to be a balanced portfolio. And why is that? Because in the short term space, better returns than fixed deposits and your
Sir, your audio is getting
debt mutual funds or the high yield debt papers. Just 1 second, wait. Is this better?
Yes, sir. Hello, sir. Sir, not able to hear you.
Is this better?
Yes, sir. Now better.
Okay, sure. I think there is some lag, but yeah, do let me know. Yeah, so I was saying, all the products in this fixed income space, they allow you to earn non-market linked returns. So when I say non-market linked return, it means that if, for example, there is a COVID or some external dependencies, they don't impact the specific return on these opportunities, because they are contractually obligated to give you a fixed return over a fixed period of time. So the entire concept of fixed income is that when you enter or you invest in an opportunity, you know that I will get a fixed return over a fixed period of time. So an example is, I will earn 15% over 2 years, I will earn 12% over 3 years, etc. So any external environment or external shocks will not hamper this return, unless and until obviously there is a credit question, which we will address again going forward in this presentation. But there won't be any market dependencies on the return. So it helps you to balance your portfolio by earning non-market linked returns, and as well as earning higher returns than your fixed deposit and debt space. Second, and I think this is the most critical reason why you should consider fixed income products, is because, and I like the line that we had used, is always know when your next payout is due and plan better. So with fixed income products, you exactly know what is the expected repayment schedule, what is the expected payout schedule. So you know that I'm expecting, so this is the cash flow that I'm likely to earn in the next quarter, in the next 6 months, in the next 1 year.
Sir, your voice is breaking.
Is 100%. Hello.
Yes, sir.
Yeah, so sorry. There's some issues with my Wi-Fi. Yeah. So I was saying, with fixed income products, the biggest advantage is that you know exactly when and how your cash flows will come over a period of time. And again, as Indians, I think we have a lot of financial obligations and liabilities, and it just helps us plan our finances better. So if I look at, in let's say in 30 days, we have several, month-end payments that become due. You have a monthly EMI, you have your credit card bill, you have your house rent, you might be supporting some dependents like parents or children. So there are lots of, I would say, reasons why we require some liquid money that at the month for our month end obligations, right? Similarly, at the end of 1 year or after 1 year, we might be planning an international vacation or some vacation. So these are all capital outlays, right? Now the point is that how do you set aside money for all of this? At the moment, we'll mostly set aside money and keep them again in fixed deposits or in as cash in our banks, because we need this money and we need this liquidity. Now that makes our overall portfolio inefficient, right? How can you use fixed income products to make a more efficient portfolio? You can invest in a product where you will get monthly returns. So if, let's say, your monthly overall obligations comes to 10,000 per month, you can invest 10 lakhs in a fixed income product which gives you monthly 10,000 rupees, right? So what this allows you to do is, you don't need to separately set aside liquidity. Your portfolio is earning high returns, as well as all your short-term requirements and the liquidity you need for a 30-day time period is taken care of. Second is, if you need money after 1 year or 2 or 3 years for your children's marriage, their education, or for upgrading your car or a house, for any of these milestone or goal-based investments, fixed income products become very, very helpful. So you can invest over a specific horizon based upon your own financial milestone and goals that you have. So this is something that no other asset class allows you to do today. The only other alternative is, again, I'll repeat, is to keep it in, as liquid funds in fixed deposits or, as cash. And, then your overall portfolio just suffers because you don't earn significant returns on that. The second is, just coming to how JIRAAF helps in all of this, right? So as JIRAAF, you can earn, with JIRAAF, you're basically getting three things. We are a one-stop shop for all alternate investments, and I'll come to, in detail as to what all products we are doing. But all our products basically help you earn a secondary income. It is basically mean that today you are, you earn a monthly salary. if you get some monthly cash flows or some periodic cash flows along with it, it kind of adds to the monthly overall cash that you get at home, right? So it adds like a secondary income. Second is we have some short-term products. So you can always have constant there for 30, 60 or 90 days. Continuously invest, ensure that you have liquidity. Third, and again, a very important aspect of fixed income is these are low effort investing, because you don't need to check how your portfolio is performing on a day-to-day basis. You don't need to do detailed I would say analysis of whether this stock is good to buy or not, right? Here at that time of investment that I'm going to earn X percentage of return over a period of all the things associated with that particular investment. I don't need to keep checking my portfolio again and again. So I think if you look at it, the value proposition that we bring as Giraffe is essentially all value propositions of the fixed income space, which helps you to earn a secondary income. It keeps it, and you can also have constant liquidity and completely low effort investing, right? So these are all benefits why you should consider this space. Who are we? So Giraffe, we are, I think, all of us and the management team over here, we are, we come from a background of corporate finance and been in the financial markets for the last, I would say, more than a decade. I think, Apurva introduced me, and my background is last 10 years I've been, raising capital for the company that I had worked for. Vineet, my other co-founder, he started his career at Axis Bank and then was an early joiner with Piramal Capital. At Piramal, when he left a year back, he was managing a 10,000 crore book out of South India. Vikas, whose photo you see on the bottom right, he is a 15-year, banker. 9 years he was leading the BFIG group for Kotak Mahindra Bank, right? He's a IIT Kharagpur and Lucknow grad. The other person, Pratik, on this, he's worked with Royal Bank of Scotland, with a private equity firm, Bravia Capital, and with a venture crowd fund called One Crowd. So he's also my batchmate from IIM Ahmedabad. So all the the senior leadership, I think we bring decades of experience in corporate finance, and we feel that we have the right expertise to bring good quality products to retail customers out there, and that is the that's the goal that Giraffe was started with by Vineet and me. I'll just give me 1 second. I'll just So I wanted to touch upon, all the products that we do at Giraffe. So while I've now spoken about the fixed income space and, all the products that we do, we basically categorize our products into 5 buckets. These are the 5 products that we do. The first product that we do is straight up, corporate debt. Corporate debt is essentially giving loans to companies, right? So, all of the opportunities on our platform, which are fixed income in nature, the way we work is that on our platform, as individual investors, you're able to come and participate. You will see when you log into our platform, you will see 5 or 6 different opportunities. These are opportunities where there is a company that is looking to raise some kind of money, which is required for their working capital need. And when they are looking for that working capital need, they come and approach Giraffe, or we engage with them. We have an investment team that looks at that company, their strength, balance sheet, credentials. We will then give them a term sheet if we think things look okay. Then we have a credit and risk team, which does a detailed credit and risk assessment and analysis. And then we have an investment committee, which will approve all transactions after going through all facts on paper to decide whether we want to go ahead with the transaction to list on the JIRAAF platform or not. So we do a detailed, I would say, analysis and a risk assessment before choosing to list a deal on a platform. And as a retail investor, when you go on the platform, you see 3 or 4 opportunities listed. You can read all facts and information about these opportunities. And then based on your comfort and understanding of the product, you can choose to invest or not. So as a digital platform, you can think of us as a curated platform where we bring risk assessed opportunities which we feel are good for retail participation. And all of the products that we do, and you can see it on this slide, all the products that we do, we use regulated products which are SEBI or RBI regulated, and we structure it in a manner that it allows for retail participation. So the 4 or 5 products that we do, one is a corporate debt, which is just giving a straight up, loan to companies. Uh, I have this segregated corporate debt and structured debt because they are a bit different in the yield and the tenor that we do. But structured debt essentially is, unrated papers where we are doing structuring based on some collateral or cash flow comfort that we get from companies. So these get structured. The entire transaction gets structured based on collateral and cash flows. Corporate debt is typically we take balance sheet calls. So these are rated papers. So we'll give loan to a company with a strong balance sheet and we get a rating done. And these are rated papers which are more plain vanilla. And I think all of you all would have seen in the market. So a Muthoot NCD or a Shriram Transport NCD, these are all examples of rated corporate debt. Right. While structured debt is, these are not rated papers because they are structured specifically based on collaterals and cash flows. And that's why they'll typically be in the higher yield space. Right. Then we do supply chain financing, which is called which we call invoice discounting. So this is a product which is very short tenor. So it will be typically 30, 60, 90 days, sometimes beyond that, but typically in the 30 to 90-day range, and will give you returns between 10 and 15%. Leasing is an interesting product. So in leasing, what we do is we help companies convert their capex into opex. So I'll give you an example of what I mean by that. So let's say a company is looking to buy a data server which costs 1 crore. Now the option that the company has is to spend that 1 crore today and buy the server, but it's not maybe capital efficient for them. So what we do is that we can say that, we will buy the data server for you and give it to you on lease. And you pay me over 3 years or whatever, 2 years. So it helps the company to avoid the initial upfront payment of 1 crore. And it gives the company time of 2 to 3 years to make, rental payments against that asset. And let's say that asset is revenue generating, then most of the times the company is able to pay for that asset from the operations itself. So it becomes very efficient from a financial and again cash flow planning for the company itself. So that's why leasing also is another type of working capital solution. The last is venture debt and revenue based finance. These are new age products which have been designed for the startup ecosystem. So, these are specifically targeted to the startup ecosystem. So we work with well-funded companies, marquee VC funded companies to do venture debt and RPS. The reason that we do all of these 4 or 5 products is if you look at the yield and the tenor, each one has its own range and bucket in which you'll see 99% of transactions. So as JIRAAF as a platform, by offering these 4 or 5 products, we are able to provide a lot of choice to the consumers and our investors out there. So on JIRAAF, you will see products right from 30 days, which is invoice discounting, to 3 years, which can be for products like leasing or even corporate debt. So as a investor, you have choice of investing in a 30-day product. At the same time, you will have a choice of investing in a 3-year product. You have choice of looking at something which is lower risk at a 10-11% range. Or if you're looking at high yields, you will also get options at a 18 to 20% range. So as an investor, you have wide variety of choice. You can build and diversify your portfolio the way you want to, and that is the biggest advantage of a platform like JIRAAF, right? As as a startup ourselves, we are backed by some of the most, I would say, well-known investors globally and in India, right? So we have raised totally $7.5 million in equity till date, and we are funded by Axel Partners. Sequoia, Axel, these are names that you would have heard. Axel are early backers of Swiggy, of a lot of companies, Urban Flag, Flipkart also. They are one of the top, I would say, 3 global VCs, in the world. So Axel is our leading investor as well. Mankekar family office, again, some of you who are active in the equity markets would have heard of Shivanand Mankekar, Kedar Mankekar. They are the more introvert version of Rakesh Jhunjhunwala, right? So they believe in this high fixed income space in a big way, and they are large backers. In fact, they were our first investors. And then we are also supported by some of the more well-known entrepreneurs in the country. So Siddharth Shah of FarmEasy, he's a co-founder of FarmEasy. Ramakant Sharma, the founder of this space. Prashant Singh, the founder of MedLife. These are all successful and well-known entrepreneurs in the country today who are backing us. Vineet and I, we got together in July 2021 of last year, and we launched JIRAAF as a platform on 10 September. So it's still very early days for us. We've been in this business for 7 months now. So these are some of the numbers that we have, or the traction that we have able to generate in the last 7 months. So we've done transaction volume of 257 crores till date. We have had 0 defaults or delays. We have returned 130 crore of capital. This includes returns plus principal. So because our invoice discounting products are 30, 60, 90 days in nature, a lot of capital gets returned in quick period of time. We have a team size of 37 people today, headquartered out of Bangalore. On our platform, we have 10,300 registered users, out of which 550 unique investors have participated. Cumulatively, would have done more than 1,000 unique investments. So we have almost 50% repeat rate that we see on our platform today. And we have almost 80 channel partners like yourselves, who have gotten empaneled with us, and about 30, 35 of them who are actively contributing. So we hope to engage, with the ecosystem in a larger way. We are building a tech product just to, which will be specifically designed to cater to the channel partner ecosystem, because we feel that investment is a very trust-based product, and while we are trying to build our own trust and credibility as a platform, and that will take time, and it will only happen through performance that we are able to demonstrate. But if you are able to bridge that gap with channel partners like yourselves, then if you have experienced us with a few clients over a period of 6 months, 1 year, 2 years, 3 years, we hope that you will recommend us to more and more clients of yours. So my only request for the entire group over here is that do give us a chance and try us out. The minimum investment on our platform is 1 lakh rupees. So the idea is to democratize and make these opportunities accessible to everyone out there. So you can start small. We are not here for the short run. We are here for many, many decades. So do try us out with the smallest check possible, and build that comfort, and we'll be happy to collaborate with you over the long term. And as and when you build comfort, you can take choices to take our products to more and more of your clients. So that is my request. I'm happy to take any questions that the viewers have over here.
Yeah. So we have one question from Mr. Mohsin. What are the checks and balances kept to ensure JIRAAF does not go overboard and take under unwanted risk?
Right. So see, as a platform which works with corporates to provide working capital solutions, we work like MNC, like any other MNC or a large NBFC would. So internally, we have an investment team. Then we have a credit and risk team. We have an asset monitoring team, asset management and monitoring team, and then we have an investment committee. So the credit and risk team is not only managing, or is doing risk assessment at a opportunity or a deal level. but we are also doing risk assessment at a portfolio level. So, we work using Basel III norms, all, I would say, the portfolio, the portfolio allocation is based on these risk frameworks and our internal parameters that we have set for ourselves, which we keep monitoring and reviewing from time to time. So we also know, as a platform, we treat all monies that get invested through us, we treat it like it is our own money. And hence we need to plan for a portfolio diversification at a platform level as well, which we monitor from time to time. So as a digital platform, to answer that question in one line, it is something that we track on a monthly basis, and all opportunities and transactions that we take up, this becomes an internal critical factor to say that how the overall portfolio looks for Giraffe at a platform level. And that becomes a key. So that's a key part of our risk management strategy. Second is we have two external members on our investment committee starting May. So we also brought them on board so that we can make our own risk practices more robust, and we'll have external, very senior leadership people. So one is Mr. Anup Kuruvilla. He, was the DCM Managing Director of Debt Capital Markets for RBS Singapore. And we have another, gentleman who was the ex-India, MD of JP Morgan. Right. So both of these people are as external ICs on our board and because they are senior retired leaders, we take guidance from them and ensure that as external members, they keep our practices robust, and we don't take wrong decisions at any point in time. So this is the two things. The third is obviously at the opportunity level, we keep our processes are very thorough, and we keep trying to improve iteratively, with every transaction that we do. So I think that's something that you understand. So I don't want to take more time explaining that. Yeah.
Right. So one next question from Mr. Karthik Kannan. How does Giraffe make money? And if there is any default, is it entirely borne by the investor?
Yes. So Giraffe can make money in 2 or 3 ways. We don't make money in all the ways at the moment, but these are possibilities that we have. So one is, we can charge all the counterparties that work with who need capital. We charge them a fee as, for basically providing this capital to them through the Giraffe platform. So that can be a one-time fee, or it can be a fee that we charge over a period of time. The second is in some structures we as Giraffe, we also do post-investment monitoring and asset management. And as post-investment monitoring and asset management, we have the flexibility to charge an asset management fee. Third is we don't charge our customers anything yet, but it is something that we can do. A lot of other platforms out there do, but we don't charge any of our customers yet. So these are the 3 avenues where Giraffe can charge a fee. The only place where we are currently charging a fee is the first one, which is where we charge counterparties some fee for arranging the capital for them. So that's a one-time fee that we charge, or we charge it over a period of time, varies from structure to structure. Typically, the fee that we charge is around the 2% range, right? So that's the fee that we charge. Second is in case of a default, in all the in all of this, Giraffe's role is basically of doing a risk assessment and bringing good quality opportunities. We handle investors pre-investment, during investment, post-investment, but the entire risk is on the investor. So because in all the cases, the legal constructs and the legal the documents are structured in a way that the investors are directly participating in this opportunity with the companies or the counterparties, and the risk completely rests on the individuals or the retail investor. Now that is the reason that we are constantly that is the reason that we have kept a minimum size of 1 lakh as our entry point. We could have even done as 10,000, 1,000, 5,000, but we felt that people who participate should understand what they are participating in, should understand all risks associated with these investments. No high yield product in the country can come without risks. So we should understand what those risks are, and then decide to or choose to invest our money. So that becomes very critical, and that is
a platform.
Sorry,
And
sir.
that is why we feel that, if it's a minimum of 1 lakh, people will spend enough time, energy, and effort to understand where they are investing, right? So that is the reason why it is 1 lakh. So the risk completely is with the investors, and you can mitigate this risk to a large extent by diversification. On Giraffe, we have multiple deals and opportunities, and they will keep getting listed every month, every week. So instead of, if you have 5 lakhs to invest, you should diversify over 5 different transactions in different kind of assets, so that you keep, mitigating your risks of, if in case there is a delay or default. As of today, we have zero delays or default, but we are not a magician. So even a Kotak Bank, a HDFC Bank, a Bajaj, all the best names in the country, at a large scale, they see a 1% NPA. At a large scale, we will also it is a fact of life, because some unforeseen situations happen, and these things may happen in the high space. We will keep educating our customers and will be completely transparent, but it is it is required that people understand what they are participating in and diversify to the best extent possible. So,
Right. So one question from Mr. Venkat Ramana. May I understand the taxation part in your offering, as most of them cater to short-term holding tenure?
yeah. So all the income, that these are mostly structured like debt instruments. So all the income that you will earn is like interest income. So because this is interest income, they will come as other income in your individual tax filings, and they will be taxed as per your tax slab. So if you're in the 30% bracket, then 30%, and so on and so forth. So this will be as per your tax slab.
Right. The next question from Venkatramana is, my second question is, how different your platform is from Wint Wealth, WINT Wealth?
Yeah.
Your platform also requires Demat account mandatory for listing of units.
So Wint Wealth is a great platform which provides one of the products, which is your rated corporate paper. So Wint Wealth is typically, you'll see products in the 9 to 11 or 12% kind of a range, and they work with only rated NBFCs and offer their papers. They are trying to create a space in that segment. What Giraffe has done is, that will be probably 10% of our offering. So we offer that product and also offer 5 others, which I had mentioned earlier. And what that helps us to do is, we are able to provide a lot more choice and variety on the platform. So Wint is a similar platform which offers, I said, one of the products that we do. So there is a certain overlap. The second question was, do you need Demat? Everywhere where we do, corporate debt, venture debt, revenue-based finance, these products are done through a private placement of debentures, and they are all in the Demat form. So you'll need Demat accounts to invest in these. However, invoice discounting, these are, underlying contracts and agreements. So you don't need a Demat account to invest in this. In leasing, we typically do it through a private limited or a LLP. So you become shareholders or partners in the company. So again, you don't need a Demat account in this, because you will have the proof of ownership, from your shareholding or your partnership in the LLP. So depending on product to product, for 3 of the 5 products, yes, you need a Demat account. For 2 of them, you don't. So,
right. So one question from Ms. Kiran. Can a NRI client from USA invest in your product? Is it online or offline investment?
So all our investments are online. So we are a completely digital platform. I think everyone who's participating in this webinar, you can log into JIRAAF.com. It will take you a minute to register and maybe 5 minutes to complete your first investment after completing your KYC. So we are 100% tech-enabled digital platform. For NRIs, we kind of ensure that we tell upfront which products are okay to invest and some which are not, because NRIs can't participate in unlisted debt securities. So private debentures is something which NRIs can't participate in. But for example, the leasing transactions where you become shareholders or partners in a company, as well as invoice discounting, both of these products NRIs can participate in. So we kind of upfront tell you whether this is NRI suitable or not. Some of the products are, yeah.
Okay. One more question from Mr. Karthik Kannan. What kind of training and hand-holding is provided by your platform, since some of your offering might be a new option for us?
Yes. So everyone who gets empaneled with us, we keep having monthly knowledge sessions for all our empaneled, channel partners. In each of these knowledge sessions, different members from our team will come and talk to you about mostly about which is product related training, and then a lot of it will also cover what all are the risk processes that we internally follow, right? So our investment team, our credit and risk team, me, Vineet, my other co-founder. So we keep rotating and keep taking these sessions on a monthly basis. So everyone who gets empaneled with us is free to participate. And the idea is that we also explain, and we want everyone to understand what each of these products are.
Right. One question from Mr. Shrikant Narasimhan.
Sure.
Is any tax-free bonds available in your platform now? If so, what would be the yield?
No, so we don't have any tax-free bonds available because these are mostly provided by government and mostly in the infra sector. So we don't have any tax-free bonds on our platform. Yes.
Right. The KYC is completely online, no, sir?
KYC is completely online. You can do it in 2 minutes. Yeah.
Right. This restriction for NRI, I mean, only US NRI or any? I mean,
no, any NRI. So anyone with an NRI status, they can't participate in. They can only participate in public debt markets. So all the debentures, and these are all structured products that we do, they form a part of the private debt markets where NRIs can't participate. However, like I mentioned, they can participate in invoice discounting and leasing. So these are two products where they can participate in.
Right. Any other questions? I think that's all, sir. I think, yeah, thank you for so much for, yeah, one more question. What is the process of empanelment? Is it, it is not available digitally? I think someone had checked your website.
Yes. So we have a team, and once this webinar is over, you will get a mail from JIRAAF, and all, all our relationship managers will be marked on that mail. So we have a team that caters to, our partners. So it's the strategic alliances and partnership team. They will get in touch with you over the next 3 or 4 days and share our empanelment forms. And anyone who wishes to empanel, can share those details, and we'll get empaneled. We are also building a tech platform I mentioned. So in 30 to 45 days time, the complete empanelment will also be digital. But till then, please bear with us with a manual process.
Right. Okay. Any other questions? I think, thank you. Yes, that's it, sir. If anything, I think we definitely have your email address, and we will be sharing the data also. So you can definitely get in touch with them. Thank you so much, sir. Thank you.
Yeah, thank you so much for organizing this. Thank you everyone who heard me out. There was minor glitches, so not a smooth session. I'll be happy to take questions. Our team will be there to have discussions. We can have one-on-one discussions after this session as well. So please feel free to reach out. Like I mentioned, we will reach out personally, but feel free to reach out yourselves as well. And we would love to collaborate with everyone over here. Yeah. Thank you so much. Thank you, Apollo. Yeah.
Yes, sir. Thank you.